Hello, good morning, everyone. If you can hear me clearly and can see my screen, kindly type in hi in the comment section. Oh, thank you. Good morning, Carrie. How are you doing this morning? All right, thanks for the confirmation. Can I see some other highs in the comment section, please? I want to make sure we are all on the same page before we begin our activities today. Hello, Tia. Okay. All right. Thank you, Kent Hunter. Good morning. Tipkoi, good morning. Oh, that's great. So that's beautiful. I'm glad we are all pumped up this morning. So once again, I want to welcome you all to yet another beautiful session of Extreme Speed Live with my humble self as usual, Sheriff Daramola. I shall be taking you on a trading journey where we shall be evaluating the financial market. We shall be identifying trade continuation patterns, reversal patterns, market structures, and we shall be using these parameters to determine or to identify trading opportunities lining up for us during the New York session. So with no further ado, let's dive into the chart and let's see what is happening. If you have any pair or any financial instrument you want us to look at, feel free to drop it in the comment section and I will try as much as possible to incorporate it into my schedule for today. So thank you, and let's dive into the chart and let's see what is actually happening in the market. The first pair we will be deliberating on today, as usual, is going to be the US oil. And if you remember yesterday, we had a perspective that we were looking out for in the form of a breakout of the key level, a retest of the 102 key level to take advantage of that bearish momentum, which never happened. We were expecting this to happen before we see that bearish momentum, but that never happened. However, we were able to see a breakdown of the structure at $98, $98, $99 area, and a retest of that structure, which sent price crashing into the take profit target zone we identified yesterday. If you are taking that opportunity yesterday, kudos to you for doing that. However, for those who have missed out on this opportunity, how do we intend taking advantage of a potential momentum as we head into the New York session? So, well, the first thing I want to be doing, let's just first of all clear this area as this is no longer relevant at this point as we have already gotten this achieved. So how do we intend taking advantage of any potential opportunity lining up for us? So one thing I'm looking at this bearish momentum that kick-started the early hours of this morning, I'm thinking this movement is going to head into our potential demand zone at around the $90.50 mark, after which we might be seeing a possible bullish potential from this area. However, since we have this structure now, how do we take advantage of that move when it finally happens? Well, the first thing I want to first of all say is this. Remember, we do have a key level at the $97 mark, which has been holding price action uh, resisted. If you can see, we can see what happened in the past here, where as soon as we saw the breakdown of that level at the $97 mark, we saw how price action has been this area has been a supply niche for participants in the markets in the past. You can see then it became a demand zone here, then it became another demand zone here, and right now we have a breakthrough of the structure at this point. And we all understand that from a technical perspective, if we see a breakout of or breakdown of structure, we expect price to do a retest of that structure with the intention of moving in the direction of the prior leading price action. In this case, we have the prior leading price action here is more or less a bearish drive, and we want to be looking of how to take advantage of that bearish move as we head into the New York session. So what we want to be looking forward to at this point is to look for a possibility of price coming back into doing a retest of that structure, which patterns on lower time frame that will support a trend continuation to the downside from here. So this is what we might be looking out for as we head into the New York session, so that we can join that bearish momentum. It is advisable, it's not advisable to join right now, as we want to wait for confirmation. Remember, we don't get too excited at the sight of a signal. We want to wait for the confirmation to come in, after which we will take advantage of that move to the downside from there. So if that happens as projected, we should be having around 500 pips to catch if price moves the way we have projected at this point. So this is the first scenario I'm looking out for at this point, and let's see how price action is going to play in that regard. The other scenario we shall be looking out for at this point is the possibility that a bullish momentum could actually come in. And that bullish momentum can only come in if we see a significant break above of that key level at $97 mark. So what I'm saying here is this: if price comes back to the key level and one way or the other we witness a breakout of that key level, then that should give us a signal that there is a possibility that price will be going to the upside from here. So what we want to be doing at this point is to wait for confirmation in the form of a retest of the structure around the key level area, the $97 mark area, with patterns on lower time frame that supports a trend continuation. So it could become in the form of a double bottom structure or whatever reversal pattern it comes in, and then we take advantage of a breakout retest of structure to push price to at least the $102 mark around this area, which will probably dovetail into I think around 450 pips minimum to catch here if price moves in that direction. So we have two scenarios here on the US oil. So we want to wait for price action to come back into the key level at $97 mark, where we want to be taking advantage of a bearish momentum if we sight a reversal pattern or a rejection, multiple rejection of the $97 mark. We take advantage of that move into the potential demand zone we identified around the $91 area. However, if price breaks above the key level at $97 mark, a retest of that structure should definitely send price going to the upside from here. So this is what we are going to be looking out for at this point. And at the same time, it is important that I also give a perspective into I want to add a caveat into the bullish potential that we are looking out for on the US oil, and that is this. If we look at what happened since price rejected that demand zone on the 14th of July, we saw that we have a potential an impulsive move to the upside, and this could probably be a retracement of that impulse leg, which could send price going to the upside from here. So one thing we want to be looking out for is if price breaks above that key level, then we want to be looking for that bullish potential that that might be a trend continuation of the previous impulse leg here. I hope my explanation has been clear enough. If you seek further clarification, feel free to drop it in the comment section so that I can shed more light in that regard. So I'll be taking the 10-15 seconds off right now to look at the comment section. If you have any questions, feel free to drop in the comment section. Hello 492 530. Okay, hello, how are you? Okay, Proverb wants us to do BTC. Okay, I'll pen that down. I will try and incorporate it into my schedule for today. Proverb. Okay. Hello, Wadia. Good morning to you. How are you? Okay. You want us to do gold? All right. I think we already have a breakdown on gold. We have a bearish signal on gold already. We are going to look at gold. Since we did something on gold yesterday, we shall be definitely looking at gold today. So, fasten your seat belt and stay tuned in as we progress. Okay? So that is that on the US oil. So in the absence of no questions, let's move on to the next pair here. So the next pair we're going to be deliberating on is the UK oil as usual. And of course, we normally have the same setup as usual. And one thing we have here is that price has moved in our direction as expected. We actually had two scenarios here yesterday, and the first scenario we were looking out for was that if price breaks above that neckline area at hold on a second. We had a neckline sitting at this area at 106.5 area. So we were saying that if price breaks above that neckline and comes back to do a retest of the neckline, then we could take advantage of a bullish momentum, which actually happened. We actually saw the breakout of that structure and price came back to do a retest of that level at the 106.5 area, and you would have taken advantage of that move, but unfortunately price came back down to stop us out of the trade, only to come back to do a retest of that area to push price to the downside. And if you look at the structure we have here for the bearish momentum that we gathered here yesterday, we saw the breakdown, we saw the retest of structure, price came back down, does a retest of that structure, and then we saw another retest of structure before we push price to the downside. So we had quite a couple of confirmations during the course of between last 24 hours that pushed price to the downside from here. So for the US oil, for those who are taking advantage of this move, kudos to you. And for those who are yet to take advantage of this move, how do we intend taking advantage of this move? So what we want to be looking out for at this point, since we already have a strong key level at $104 mark, we have a strong key level at $104 mark, which is here, and it has been serving us in the last 1 week. So what we want to be doing here is to look out for a retest of the structure. If that is going to happen, we look out for the retest of this key level, and then look for reversal patterns on lower time frame to join the decline to the downside. So at the moment, I'm still looking at the $100 mark as my take profit target. So we are looking at the $100 mark as a take profit target for now. So if we are going to be taking it right from the retest of the key level here at $104 mark, we should be hoping to get around 350 pips to catch here if price moves as expected. That's the first scenario here for any bearish momentum. So the second scenario I'm looking forward to is the possibility that price could come into the $105 mark. Hold on a second. I want to identify this $105 mark. So we have $105.50 area, which was broken during the course of the early hours of today. We saw the breakdown of this area, which I explained yesterday should give us a signal that price is going bearish, and we saw the breakdown of that neckline structure. And what we want to be waiting for, like I told you, the first one is a rejection of this area. If we see a reversal pattern at the $104 mark, we want to take advantage of the bearish potential at the breakdown of structure. However, there is a possibility that price could still go as far as coming back to do a retest of this neckline at $105.50 mark. So if price comes into this area, what we want to be looking out for is a reversal pattern here, and that is, we could see a double top structure. It could be an inverse, it could be an head and shoulder pattern, whatever pattern it is that forms around this area. Then we look out for structures in the form of a breakout of that structure, retest of structure on lower time frame to join the decline to the downside. So this is the scenario we're looking out for on the UkOil. So what we want to be doing here is having a bearish bias. The bearish bias is more or less very, very visible here as we head into the later part of the week. So we are still looking for that bearish momentum. So for those who have missed out on this move to the downside, let's wait, let's be patient to see price come back to do a retest of either the key level at $104 mark, or probably go as far as retesting the $105.50 mark before we join the decline to the downside. And for us to join the decline, like I always mention, we want to be looking out for a reversal pattern. So it's pertinent that we know our reversal patterns very, very well. We want to be looking for it could be a double top structure, it could be a head and shoulder pattern, it could be a 1 2 3 reversal pattern. Whatever it is, we want to look at price come into that area, give us the appearance of that reversal pattern, then a breakout of structure should confirm that we are going to the downside from this area. So if we are taking advantage of the bearish momentum from the $105 mark, we should be having at around how many pips that is, around 500 pips to catch here. So if that happens, we want to have our stop loss right above the previous low, maximum right above this area. That's the maximum area we want to be having where our stop loss is going to be. So and then our take profit target maximum is $100 mark. So you could use within this range to identify your TP and stop loss here on the UkOil. So we want to be looking for bearish momentum here. And however, for those who do counter trend trading, yes, there are people who do counter trend trading, and I'm very sure we have scalpers too as well in this market. What we will want to be doing here is probably taking a bullish momentum. That is, if we see a reversal pattern here, hold on a second, allow me to delete this one so that I can give you a clearer picture of what I'm talking about. For the scalpers, you might want to look forward to something like this. Price comes back to do a reversal pattern here, then breakout of structure. You can retest of structure to push price into this area. So that is an opportunity you might want to take, and that's like a retracement move of the previous impulse leg that we have here. And if that happens, you might want to take that counter trade opportunity, but it's more or less risky. So if I were you, for long-term traders, I would just advise that you hold on for price to come back into either the key level at $104 mark or the one at $105.50 area to join the decline to the downside. Are there any questions whatsoever? $4.92 is lost on UsOil. I mean, do you want me to retake it again? Hello, Max. Good morning. Okay. Wadia, how are you? I'm fine, thank you, Wadia. Good morning, 579. Moson, good morning to you. WAC 2307, good morning. Glad to have you around. How are you today? 685. Okay, we'll do US Tech. I promise you that today. I'm going to make sure I do that today, US Tech. US Tech, I'll put that down. I'll trust as well to put it in my schedule for today. So, all right, all right, all right. So 492 wants me to do UsOil again, I guess. Okay, let's do UsOil again, and let's do UsOil again. Let's do a recap of what my expectation are on UsOil. So on the UsOil, like I explained earlier, we have two scenarios we are looking out for on the UsOil. Um, I'm not sure if you were able to take advantage of this move to the downside, which entered into the TP zone we said around $97 mark. So my expectations is this. I'm expecting price with the way the structure is right now. If we look left, we can see that price has been on a bearish drive over since the beginning of the month. And in fact, since the middle of June, we have been on a bearish drive. And considering the long-term bearish momentum here on the US oil, it's more or less possible that price could still come into this potential demand zone we identified at around the $91 mark before we see a trend continuation to the upside. So if you had missed this move, then we want to wait for price action to come back to do a retest of our key level at the $97 mark area. So if we see a retest of this level, and this retest will come in form of a reversal pattern, it could be a double top structure. We could see the first rejection, we see the second rejection. Mind you, this observation is done on the lower time frame. It could be your 15 minutes time frame, it could be your 10 minutes time frame, it could be your 5 minutes time frame, whatever that is. We want to look out for a reversal pattern around the $97 mark to join the decline to the downside. We'll take profit target around the demand zone area, that is between the $90.50 area and the $92 area, which will dovetail to around 550 pips to catch here. That is the first scenario I'm looking at for the US oil. And then the other scenario is there is a possibility that as we are waiting for price to come into this key level area at $97 mark, we could have a breakout of structure. And if you see that breakout could come in form of an engulfing candle. That means a bullish engulfing candle striking through that key level at $97 mark. And if that happens, then we should be thinking of a potential bullish momentum which could send price, after a rejection of that key level, send price back into the $102 mark, which also shares a confluence with the bearish trend line we identified here, after which we could be looking forward to a downtrend scenario from that point. I hope you are with me, please. So the first scenario, let me come again. The first scenario is if we have a reversal pattern here, that is multiple rejection of the zone to push price to the downside. That's the first scenario. And then the second scenario is if we have a breakout of that key level at $97 mark, a retest of that area. So like I said, we are looking forward for an engulfing candle to give us that confirmation that actually price is going to go to the upside. So if that happens, we want to see price break, retest this area, push back into this bearish trend line, after which we look out for patterns here that supports a trend continuation to the downside. So the perspective on the US oil is still very, very bearish at this point. And the only time I will be thinking of taking a buy opportunity is if I see a breakout of this bearish trend line, and then and if you look left, you can see that this area at one point in time held as a supply zone. Let me extend that out. You can see it as at one point in time held as a supply zone, which gives us the possibility that that area still holds the selling momentum. So what I want to be looking out for if I'm going to be doing a bullish opportunity here is a significant breakout of that key level, that supply zone area, which also shares a confluence with that bearish trend line, then a possible retest of structure of that trend line to push price to the upside. So if you look at the setup here, you can see that it's more or less looking bearish. So we want to be looking for bearish potential here on the US oil. And the first scenario is the retest of the $97 mark. And if that doesn't happen and we see a breakout of that level, then we want to wait for price to come into our $102 mark, which also shares a confluence with that bearish trend line, to look out for possible opportunities to join the downtrend momentum. So whatever happens in both scenarios, our take profit target still remains at around this area, and our stop loss for this one right above that bearish trend line here, we should have our stop loss sitting at around this place, maximum 105 area. And if it's around this area, our stop loss should not exceed this point. So this is what we are looking out for on the US oil. I hope my explanation was a little bit clear. I hope my explanation is a little bit clearer now. Who was asking for that anyway? 492, are you okay? Okay, you're welcome, work 2307. Ryder says my voice is echoing. Is that true? Kindly do, we'll look at Bitcoin. Just stay tuned in. Oh, it's okay, 359. You're welcome. All right. Can we move on? Can we move on? Can we move on? Okay, let's move on. Let's move on to the next pair. So the next pair we will be deliberating on is the GBPUSD. And remember vividly, yesterday we were expecting a bearish momentum on the GBPUSD, which appears to have taken shape. And this is what was okay. Let me give you. Let's quickly do a quick recap of what our expectations were yesterday. During the course of yesterday's live session, we were around this area. And we were saying that we saw the breakdown that happened here. We saw this bearish engulfing candle that happened, and we were waiting for price to do a retest of that neckline at the 1.200 level to take advantage of that bearish move to the downside from here. And we saw that move happened. We saw price came back again to do a retest of that neckline to push price further to the downside. And at this point, remember I told you that our first take profit target should be at the 1.192 area, which appears to have been achieved. We have a first take profit target achieved there with about 80 pips thereabout, if I'm correct. Let's see it again. Let's look at it again, because I also took this opportunity this morning. Okay, yes, 80 pips. So we already have this level the first take profit target taken out at this point. So now that we have taken that out, remember we have in our long-term perspective at this area at the 1.18300 area, which is around 160 pips we are looking forward to. So what we want to be doing here is this. How do we intend taking advantage of this trend continuation during the New York session? Now that's what we are going to be deliberating on right now. So let us look at the structure we have here, and let's see what has been happening. What has been happening since on the 20th of July. We can see our price has been finding lower lows and lower highs as soon as it got this 1.203-20400 area rejected. We saw our price was finding lower lows and lower highs. And one thing we want to be doing at this point is to connect the series of lower highs so that we can have a uniform bearish trend line that will guide our action going forward. So what I want to be doing here is to bring out my line chart at this point, and then we connect the series of lower highs to have a new yardstick that will be guiding our action during the New York session. So this is what we want to be looking out for now that we have this. So let me make this a little bit lighter. It's too thick, right? Okay. So let's make it a little bit lighter and then bring back our line chart, our candle chart rather. So we have this trend line guiding our actions now. So one thing we want to be looking out for is price to come back to do a retest of this trend line, and we look out for reversal patterns to join the rally to the decline to the downside. And if price breaks down the 1.19200 area, which has been a key level that has been serving us since last week, we want to see price do a retest of the structure so that we can add one more position to this trade. Now, to make our job easier during the New York session, we need to have one more key level to guide our action. So what I want to be doing at this point is to connect the series, a level which has been a very significant determinant of price action in the last 2 weeks. So if we look left, we can see that at a point in time, this area has been a supply niche, and it later came back to be a demand zone after the breakout of that structure, and then it came back here again to become a demand zone again. So one thing I want to be looking out for is that area to come back to be a supply niche for me to sell the pair. So at this point, I would like to connect the series together to make our key level going into the New York session. So we have key level sitting at 1.19750, I guess. So let's label the for the sake of clarity. Key level at 1.19750. So we have that, and then we have bring out. Okay, good. So this is what we are looking out for now. So we want to see price come back to do a retest of either this bullish trend, this bearish trend line, or it could be this line. Most important thing is we want to look for patterns that supports a trend continuation to the downside, and that pattern will come in form of a reversal pattern. So we want to look for a reversal pattern within this area to push price to the downside from here. So this area is a very sensitive area. We want to be looking out for selling opportunities. So I want to advise that we'll be on standby to take advantage of that move when it finally happens. However, remember, we always have two scenarios. And the reason why we normally have two scenarios is basically because this will always make our job easier when we head into the New York session. As if we only have one perspective, you might find it very difficult to take advantage of an opportunity if something else happens. So the reason why that is now, we need to have two scenarios we are going to be looking out for. And if that happens, it's going to be very easy for us to take advantage of that move. And one thing I also normally mention here is that if possible, you might want to screenshot my screen so that you can use it as a reference point when you about making your own individual decision on whatever pair you're trading. So the second scenario we want to looking at on the GBPUSD is a possible potential move to the upside. That is, if we see a breakout of that bearish trend line, then that gives us a signal that we might be having a bullish momentum. But remember, we are not going to take that signal right on, as we don't get too excited when we see a signal. We want to wait for confirmations, and that confirmation will come in the form of a retest of that trend line, after which we look out for a reversal pattern right above that key level at 1.19750 area to take advantage of a trend continuation to the upside from here. So this is the scenario we're looking out for. We have two scenarios. For selling momentum, we want to see price oscillate right below the key level at 1.19750 to take advantage of any selling momentum. So let me just, for the sake of clarity, let me put this here: bearish signal right below that level. We have bearish signal right below that level, and then bullish signal right above that level. That is after the breakout retests of that structure. I hope you understand what I'm saying here. So we want to look out for retest of this trend line or retest of this key level at 1.19750 to support a bearish momentum. And if we do see a breakout of that trend line, then a retest of that level should give us confirmation that we are going bullish on the GBP USD. So for those who took advantage of the selling momentum that happened yesterday, kudos to you. What I'll be advising at this point is to move your stop loss to somewhere around your break-even level, so that you don't actually lose whatever you have made on this trade. So it's better we don't lose go back into a loss position than to go back to a loss position here. So on the GBPUSD, this is my perspective here. If you have any questions or you need me to shed more light on certain areas in what I've discussed so far, feel free to drop a comment in the comment section. Chixie says my voice is echoing. Please, can somebody confirm my voice is echoing? On my monitoring device here, it doesn't show that. I will suggest you probably shut down your app and then restart it all over again. Please do that and let me know if it still echoes. Okay? Good morning, Pep80. Glad to have you around. Lucky number 68. Hello. How are you? Ken Lido is asking that at what point are we supposed to set for bullish? You mean on GBP USD? Okay, 359. Thank you very much for that confirmation. Very good. Ken Lido, and also bearish. Yes, it's very simple. Allow me to remove this again and let me re-illustrate what I'm explaining so far. Now, to make our job easier during the New York session, I have identified two parameters that will guide our action going forward. The first parameter I've identified here is the bearish trend line. Here, the dotted black line you can see on your screen right now. I'm going to wave it right now. I'm going to wave it so that you can see what I'm talking about. That bearish trend line is our first parameter that's going to guide our action during the New York session. And then the second parameter is the key level we have identified at 1.19750 area. This key level, I'm waving the key level line right now. So those are the key levels that's going to guide our action. So now, for any bearish momentum now, we have seen that price have given us that signal we are looking for, that bearish momentum. Price has come down into this area. So we want to see price come back into this key level at 1.19750. In fact, it can even go as far as testing this bearish trend line. Is still very valid. The bearish momentum is still very valid. But one thing we are looking out for is a reversal pattern. And when I say reversal pattern, it could be your double top structure, it could be your 1, 2, 3 reversal pattern, it could be your flag pattern, whatever it is. So let us just use a double top structure for example. So if we have the first rejection of this level, price comes back down, then a second rejection of this level, then a breakout of this level on the one on your lower time frame confirms that price is going bearish. Then you can now join the trade from that area to the downside. Then I also added that if we do have a breakdown of the 1.19200 area, this level here, we see a breakdown of this level, and then we see a retest of this level, we want to add one more position to our existing trade. A retest will be a reversal pattern. It could be a sharp rejection. We want to add one more position to our existing trade for this bearish momentum. So what this simply means is that right below the key level, we are looking below the key level at 1.19750. We are looking forward to a reversal pattern that will confirm to us that price is going to the downside. Remember, we don't get too excited at the sight of a signal. We want to wait for further confirmation, and this confirmation should come in form of a structure, a reversal structure that will push price to the downside. So that's the first scenario we are looking out for. Then the second scenario is this: if we see an outright breakout of that trend line, then a selling momentum should be negated at first sight. So if a selling momentum is negated at this site, we want to wait for confirmations, and that confirmation should come in the form of a retest of that trend line. Remember, if a price breaks out of the structure, let me highlight it for you so that you can see what I'm talking about here. If price breaks out of the structure, definitely from a technical perspective, we want price to come back and do a retest of that structure to give us a confirmation that we are going bullish here. So that means price is either going to come back into that trend line or come back into the resistance, into the key level at 1.19750. And if you look at the structure, the key level and the resistance trend line shares a confluence, which could give us further confirmation if price does a retest of that level to go bullish on the GBPUSD. So this is what I'm talking about here. So if we are going bullish on the GBPUSD, our take profit target should be at the next resistance or at the next trend line here. If I scroll in, we identified a trend line on the 4 hours time frame which has been holding price action since the mid month of June. This trend line, so that could be our first take profit target if a bullish momentum suffices. That means if a bullish momentum comes in, that area should be our first take profit target. I hope I'm clear now. Kenlido, are you still there? 610. Okay, thanks for the confirmation. I just want to know if Kenlido is still with us to confirm that he understands what I just explained so far. All right. Okay, great. Thank you for that confirmation. That's what I'll be looking out. So the next pair we want to be looking out for is the XAUUSD. That's the gold. I think I saw like 2 or 3 people asking for gold. Yes, we traded gold yesterday, and I told you I was expecting a bullish momentum if we see price break above the $1,713 mark, which never happened. Hold on a second. Let's see what's happening here. So I told you yesterday that if we see a breakout retest of that 1,730 mark, we'd look forward to a bullish potential. That never happened, so we want to delete this. It's no longer relevant, so we delete this, and then we delete this one too as well. So now the second scenario we shared yesterday was that if we see a breakdown of this bullish trend line, here, a retest of that structure should push price to the downside. I took advantage of this move yesterday. I think I saw a retest on lower time frame, on the 5 minutes time frame, I guess. So yes, so this was it here on the 5 minutes time frame. I saw a retest of that area. You can see here price broke down that trend line, retest that trend line, then we move to the downside from here. But if you had missed this trade, I still think we still have some opportunity to take advantage of that bearish potential here. So how do we intend taking advantage of that move? But if you are going to be taking advantage of that move, we really need to be very, very patient at this point. First of all, remember we have a demand zone at around the $1,700 mark. We have a demand zone here, which held price action for a while before it was finally broken during the during the New York session yesterday, we saw the final breakdown of that demand zone here during the New York session, which gives us a breakout of structure. And since we have a breakout of structure, we all know that from a technical perspective, we expect price to come back into that structure to give us further confirmation that we are going in the direction of the prior leading price action. And the prior leading price action at this point is a bearish drive. So we want to see price come back to do a retest of this demand zone, after which reversal patterns on lower time frame could send price crashing to the downside. Remember, we have the bullish trend line here, which is the green tick dotted line here that I've identified here. So it's also a structure that was broken. You can see, give me a moment, let me share. We can see both structures were broken yesterday. We saw the structure broken yesterday. We saw the demand zone broken. So price moved right through both of them. So there is a possible price will come back into either the demand zone or probably come back into that bullish trend line, after which I want to be looking forward to a trend continuation to the downside from there. So this is what we are going to be looking out for. So it requires patience. And that means we have to wait for probably 12 hours. It could be, and we never can tell. We could have a sharp spike that will just come back to do a sharp rejection of either the demand or the bullish trend line here, after which we look out for patterns on lower time frame that supports a trend continuation to the downside from here. So what my advice is going to be here on the XAUUSD, if you already had the signal, the bearish momentum has already come in, we've had the signal, then we need to be patient. If you had missed that move, that price comes back into the demand zone or the bullish trend line, we look out for a retest of structure, then patterns on lower time frame supporting a trend continuation to the downside. So this is what we are going to be looking out for on the gold. So I implore that we remain patient. We be on standby so that we don't miss out on an opportunity when it finally comes in. So this is my scenario here on the okay, gold. What's going to be our take profit target? Fine, beautiful question, Wadia. Let's look at the structure we have here. Now, it's very simple. Look at the structure we have here at this point. We can see that price, this impulsive move started from around this area at around the $1,715 area, and we don't know when the impulse leg would end. That's the first thing I want us to understand. Please follow me attentively, please. We can see that we have this impulse leg right now, but we don't know when this impulse leg will end. Normally, if we are going to want to extend a TP target on an impulse leg, we normally use our Fibonacci extension tool. But at this point, we don't know when this impulse leg is going to end. So how do we know if this impulse leg has ended? What we want to be looking out for is this. If this move comes, it could be as far as this area. It could stop at this area. But whatever area it stops, what we want to be looking out for is a reversal pattern. And I'll just give an example, a reversal pattern in the form of a double bottom structure. So if that happens, we want to see price come up a little bit. Price comes down again to do a retest of that structure, and then boom, we see a breakout of structure. Then we know fine, the impulse leg has ended, and this now become a retracement phase. So if the impulse leg ends here at, let's say, 1676 area, what we want to be doing is to bring out our Fibonacci extension tool and run it right through that impulse leg, that is where the impulse leg ended, then bring it back into where we started from, and then we aim at a 127.2 1414 area. So our aim is going to be between the 127.2 and the 1414 area, where it's going to be our TP target. Remember, this is just a speculation at this point, as we don't know when the TP target is going to end. Unfortunately, I will not be with you during the New York session to help identify this, but I've explained to you vividly how we want to identify that TP target. So once the impulse leg ends, we look out for reversal pattern to confirm that the impulse leg has ended. Then we run our Fibonacci extension to right through that impulse leg, and we aim at between the 127.2 and the 1414 area. So if it ends around this area, this is where the TP target will be. So if it ends further than that, then be rest assured this tip target zone will change. I hope I'm clear on that, Wadia. Feel free to drop a comment if you are not clear of what I've just explained so far. Oh, great. Thanks for that confirmation. So that's what we are going to be looking out for now. So let's hold on to that bearish momentum on the gold. Let's wait. Let's be patient to see how price plays out. It could not be today. It could be the early hours of tomorrow morning before that confirmation comes in. But we want to be patient on this one. So that's that on the gold. Then we want to move on to what is our next pair here. I promised US Tech, so let's just do US Tech first. I wasn't able to do US Tech yesterday, so I want to do. Yeah. Okay, you are welcome, Wadia. So let us do US Tech. I think I shared something on US Tech a couple of weeks ago where I was expecting a bullish momentum to happen here, and that was on a 4 hours time frame, I guess. Yes, I think it was on a 4 hours time frame. We had the scenario, and that it actually happened. Remember, I said we were here when that happened, and I told you we were expecting price to break above that key level at 11,600, price to come back to do a retest, which happened during the later part of last week trading session. Then we saw multiple rejection that pushed price to the upside. So I don't know if you are taking advantage of that move. If you are, kudos to you for taking that move. And in fact, price moved as expected on the US Tech since the last time we did a speculation here. So now we were able to identify an ascending channel for the US Tech here, which price is yet to get into. So what I'm looking forward to, as at the time I did this speculation, was that price should come back into this area. That's our take profit target. You can see this rectangle, which I identify here as our take profit target back then. So I'm expecting price to come into that area, after which I will be looking forward to a reversal pattern around this area, a reversal pattern around this area to push price to the downside again to respect that ascending channel which we've identified. So this is what I'm looking out for. This is what I'm looking out for on the US Tech. So let's see how price action plays out. Okay, let's see how price action play out from this point. So if you had missed this move, I'm sorry, I'm not sure if we still have room for any bullish potential here. That is between here and our take profit target zone is around 2000 pips or 200 pips there, about 260 270 pips to catch. So let's see if we can still take some trading opportunity between this area and that area. So let's look at the lower time frame. So let's go as far as let's go down to probably the 1 hour time frame here. So on the 1 hour time frame, what do we see here on the 1 hour time frame? Well, after this impulsive move into the 1,200, is it 12,500 mark? Yes, we saw that price has been caught within a consolidation phase where participants in the market are yet to make a decision on where price is going to head to. In that, is it going to be going to the upside from here, or are we going to be seeing price come down from this area? So what we want to be doing at this point is to identify this channel. So to be more clear on this one, I want to scale down to a 15 minutes time frame so that we can have a clearer picture of what this channel is all about. Then we zoom in closely, bring out my line chart, and then first of all we want to connect the series of the resistance points. I want to give this a purple. Hold on a second. So we give this a purple, then we identify the support level as well. Should we use here? We have one here, and then hold on a second. We have one here, and there is another one here. So we're actually in a resistance, we're actually in a channel at the moment. This what I just drew now just confirms the consolidation phase at this point. But one thing you would observe here is this. It's more or less tending to be bullish, as you can see. Price came in here, and since that point, since testing the $12,330 mark, price is yet to come back to that level. So we're having a higher low at this point. And one thing we want to be looking out for is a breakout of that structure to give us further confirmation. And remember, when you see a breakout of structure, we don't get too excited, as we want to wait for confirmations to happen before we join whatever momentum is evolving before our highs. So what we want to be doing here is this. We want to see a break above of this resistance level. Then we wait for price to come back to do a retest of structure, after which we look out for patterns. It could be on your 1 minute time frame, it could be on your 3-5 minutes time frame, 10 minutes time frame, whatever it is. We look out for structures that supports a trend continuation from here. So our take profit target should fall within the zone we identified on the 4 hours time frame, that is between the $12,600 mark and the $12,700 mark area. So that's where our take profit target is going to be. Entry point right above the resistance level here. That is after a breakout and retest of that structure. Then we want to join that rally when it finally happened. This is a short-term trade anyway. You can extend your TP to the resistance level we identify on the 1 hour, on the 4 hours time frame. Let me go back to the 4 hours time frame to share with you what I'm talking about. So on the 4 hours time frame, remember we have this ascending channel we identified here on the 4 hours time frame. So if there is a possibility that price will still come back into that resistant level of the ascending channel before we see that move to the downside from there. So you could have, let me see how many pips that is, between 170 to 250 pips you can catch possibly. It's a very short-term trade anyway, because if you had missed that, then that's the only hope for any bullish potential here. Then the other scenario we'll be looking out for is the bearish momentum. Remember, we cannot always ignore the possibility of price going the other way around. So what we want to be looking forward to, since we already have a channel here, then we want to see how price is going to play out. Our participant in the market is going to break down the structure. If we see a breakdown of that structure, that gives us a signal that there is a bearish momentum unfolding, and then we wait. Remember, we don't get too excited at the sight of a signal. We want to wait for price to come back to do a retest of structure in the form of probably coming back to test the 12,350 mark or 12,380 mark, or probably come anywhere around here. All we just want to see is a retest of structure, then reversal patterns on lower time frame to support that trend continuation to the downside. And if that's going to happen, where will our take profit target be? Remember, we have this resistance, this support level of the ascending channel here. So there is a possibility that price will come as far as coming to that area, or we could have price come into the golden zone area of this impulse leg. So this is an impulse leg. And what's our golden zone area? Our golden zone area is the area between the 50 and the 78.6% of the previous impulse leg. So if we bring out our retracement tool here and run it through the this impulse leg, we have between the 50 and the 78.6% as our take profit target zone for any selling opportunity here. And I want to give this a yellow, then we label it TP target for selling opportunity. Selling opportunity, we have it right there. Let me give this a green. I prefer it being green. So we have a TP target around that area if we do have a breakdown of that structure. So we have around how many pips that is. We have at least a minimum of 250, 300, 400 pips there about, depending on where your take profit target is going to be here. So this is what we are going to be looking out for. Then if we have a breakdown of that structure, if we have a breakdown of that structure, a retest should give us further confirmation that we are going to the downside from here. So this is the scenario we are looking out for here on the US tech. I hope I made myself very clear. If you have any questions, please feel free to drop in the comment section. I shall be willing to be of help, as this shall be my last here for today. Okay. CZ. Okay, we are going to do a quick recap on that, so stay tuned in. 803.089. You're welcome on board. It works if you are patient and you listen. It works. Yes, we're going to look at US oil now. We're going to look at it now. I'm going to do a recap. We've already talked about the US oil earlier, so I'll be doing a quick recap on that as soon as I get clarifications that there are no questions regarding the US tech. You're welcome, CZ. You're welcome, WAC 2307 395. You're welcome. Okay, in the absence of no questions, let's quickly do a recap of a let us quickly do a recap of what we just talked about so far. So the first pair we deliberated on today is the US oil as usual, and we're expecting we had hold on a second. We had two scenarios we are looking out for on the US oil, and our scenario is more of a bearish momentum on the US oil, and the reason why that is because of the what's it called, the long-term bearish momentum we have identified here on the 1 hour time frame. So we want to look forward to bearish potentials from this area. So one thing I said, the first scenario I shared with you here on the US oil is that if you had missed this move to the downside from here, we have a key level at $97 mark, which I'm expecting, since we witnessed a breakdown of that key level. And remember, theoretically, from a technical perspective, we want to see a retest of that structure to give us further confirmation to join the decline to the downside from there. So what we want to be doing here, we want to be patient enough to wait for price action to come back into the key level at $97 mark, after which we look out for bearish opportunity in the form, it could come in the form of a reversal pattern here. It could be a double top structure. It could be whatever reversal pattern you see on your lower time frame. As soon as price comes into this area, I will advise you go down to your lower time frame, the 15 minutes, 10 minutes, your 5 minutes time frame, then look out for structures that supports a trend continuation to the downside from there. Then I also shared that there is a possibility that if price comes into this area and we see an engulfing bullish candle that strikes right above that key level at $97 mark, then we want to hold on our selling opportunities, as there is a possibility that price could retest this key level to push price back into that bearish trend line we identified on the 4 hours time frame, which also shares a confluence with the key level at $102 mark, where there is a possibility that price could come down from this area after a reversal pattern is formed. So on both perspectives, our take profit target remains right within the $91 area, between $90 and $92 mark area as our take profit target. So for scalpers, for those who love scalping, those who like trading on lower time frame, if we see a breakout of that key level at $97 mark, a retest of that structure, you look out for reversal patterns on lower time frame, you could join the rally to the upside into this area. But for long-term traders, you want to be patient enough to wait for price action to come back into that trend line, where you want to take advantage of the bearish momentum, as long as price doesn't break out of the bearish trend line. If price breaks out, then we know that we are going bullish on this one. So this is my scenario here on the US oil. So for those who want to take the bearish momentum, patience is very, very required. We need to wait and let us see how price action plays out in the next couple of hours thereabout. And if you are looking to take advantage of a bullish momentum as a short-term trader, a scalper, you want to wait for price to break above that key level at $97 mark to move in the direction of that price. It's a very short-term trade. How many pips that is from there? Let's see. Just around 400 pips to catch there, if you don't mind. So that is the scenario we are looking out for on the US oil. Then we went further to talk about the UK oil, which also shares almost the same a similar scenario. And for those who took advantage of this move yesterday, I greeted you Well done. So I told you to move your stop loss. I'm not sure I remember to tell you that. Please kindly move your stop loss right now. Those who took advantage of this move your stop loss to somewhere around the key level at $104 mark, and let's see how price action plays out. So for those who had missed this move, one thing you want to be doing right now is to wait for price to come back into the $104 level, where we want to be looking out for a reversal pattern that will push price further to the downside. Our take profit target still falls around the $100 mark. This $100 mark is still our zone for take profit target for any selling opportunities here. And if we see multiple rejection of this level, then we want to buy the UK oil. However, if price breaks further down of that key level, that is, if we see price break below the key level, retest the $100 mark, then we could be looking at the um, the resistance point of the channel we identified a couple of weeks ago. So we could see price come back into this area before that bullish potential finally happens. So we want to hold on our bearish momentum here on a long-term perspective if you are a long-term trader. So let's wait for price to do that. And then I also made mention that there is a possibility that price, if price does not reject the key level at $104, it could go as far as rejecting it at $105 area to push price to the downside. So I will advise that you be on standby for all these opportunities, just in case whichever happens is pertinent that you be on standby, since you already know the possible perspectives that is unfolding. That is that on the US oil. Then we went on to talk about the GBPUSD, where we already seen the selling signal that we were looking for, and I told you how we should be looking forward to. The first thing I said is that those who took advantage of this move yesterday should just move their stop loss to break even right now, as we want to lock in some profits. We don't want to get caught up in unnecessary shakeouts. And I made mention of waiting for price to come back to do a retest of this key level at 1.19750, which appears to have happened. Or there's a possibility that price could still go as far as retesting this resistant level of the bearish trend line, after which we look out for patterns that supports a trend continuation to the downside. Then I also made mention that if price breaks down the key level here at 1.19200 area, a retest of this level should welcome another opportunity to add to our existing position on this one. Then there is a significant caveat here, which I said if price breaks above that resistant level of the bearish trend line, then we should be seeing a bullish signal in the form of a retest of this level. Then we could be joining the rally to the upside with a take profit target at around the 1.21 area mark. So this is what we are looking out for on the GBP USD as we head into the New York session. You are welcome, CZ. Then we went on to share something on the XAUUSD, where we saw this bearish momentum, and I told you how I took advantage of this move yesterday. And for those who took advantage of that move, kudos to you guys for taking that move. But one thing we want to be waiting for those who have not taken that move, or those who plan to add more positions to this trade, what we want to be looking out for is price to come back to either this demand zone here, or probably come back into the bullish trend line we identify here before we see that trend continuation to the downside. And I also taught you how to identify the TP target for this, as we want to wait for this impulse leg to end, and the only way we will know this impulse leg has ended is if we see a reversal pattern. And I use an example. I use the double bottom structure. If we see price do this, then we know the impulse leg has ended. Then we want to bring out our Fibonacci extension to run through this impulse leg with a aim at between the 127.2% and the 1414 area as our take profit target for any selling momentum here on the XAU USD. So after that, we went on to do something on the US tech, where I did a follow-up detail on the potential we identified 2 weeks ago on the US tech, and price had moved significantly well in our favor. It moved about how many pips from there after the rejection? Over 800 pips. And then we tried as much as possible to identify a possible scenario lining up for us during today's New York session if it's going to actually happen. So we were able to scale down to a lower time frame to look out for, to identify the structure we have, and luckily for us we were able to identify a channel which price has been juxtaposing. We have price has been oscillating right between the $12,500 mark and the $12,300 area, emphasizing the indecision in the market. So we want to be patient enough to look out for confirmations, and that will only come in the form of a breakout of this channel. So I made sure to share two scenarios here where I said if we see a break above this channel, we don't want to get too excited, as we want to wait for price action to come back to do a retest of structure, after which we look out for patterns on lower time frame to join the rally to the upside. So we have our take profit targets at the resistant level of the ascending channel we identified on the 4 hours time frame as a maximum area for our take profit target. And then we also have the bearish scenario where we said we are going to be looking out for a breakdown of this channel, retest of this channel, then we look out for patterns on lower time frame that supports a trend continuation to the downside. And if that happens, we want to be having our take profit target. In the meantime, we don't want to be too over ambitious at around the $12,000 mark and the $12,200 area, at least for the meantime. And then if we see a breakdown of the structure, we could be aiming at the support level of the ascending channel. So these are the scenarios we shared today, and it has been quite a moment. I appreciate every one of us. We were very interactive during the session. I'm glad we had a wonderful time, and I'm also grateful to have this moment with you guys, and I look forward to seeing you guys again tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, same place, Extra Speed Live. Good afternoon and see you tomorrow. Bye bye.